Hi traders, this is Roberto, and this is another video for the continuing education for traders workshop. Today's lesson is top-down analysis using Heiken Ashi with 150 moving average line and the MACD indicator. And so the first thing I do is look at higher time frames to see what is the overall direction, and I also look at the 150 moving average line, so I can figure out if the market is retracing or it's doing a complete reversal. So if it's retracing, I usually wait for the retracement to finish and take the trade in the direction of the daily and weekly chart. If the market is reversing, that usually what happens is the candles close above the moving average lines. Let me give you an example of that. Like back here, the market's in an uptrend. It was in a downtrend and it finally crossed above the 50 moving average line. So we're looking at a daily chart. So for several weeks, 1, 2, 3 weeks, 4 weeks, the market was in an uptrend. So that's how you can determine if the market is reversing or if it's retracing. If it's reversing, obviously that it has to break those two moving average lines, and the two lines in MACD have to be crossing the zero line like it is down here. So those are the things I'm looking out for. So so let's get started on the lesson, simply looking for places to enter trade and using the weekly and daily chart for entries, or actually for directional bias, and trading off the 1 hour chart for your entries. Okay, so this is a great example where the market we're clearly in a downtrend. The 150 moving average line are slanted going down, and then this candle right here on the daily chart finishes its retracement and it starts heading south. So what I do when I see this on a daily chart, and I would scroll to the 1 hour chart and see if I could find that level, that resistance level where the market rallied, or rather sold off. And I'm not sure if this is it. Let me just go back to the daily chart. And yeah, that is a candle right there. So I look at the 4 hour chart first, and I see that we have red Heiken Ashi candles. They're selling opportunity. It's around the 100 moving average line. So I'm looking for a confluence of indicators. I'm looking for the 1 hour, the 4 hour, and the daily chart all to line up. If they don't, then I do not take the trade. It's not a high probability trade. So looking at the 1 hour chart, and there it is. There's a trade. The arrows, the two lines in MACD, crossing to the downside, and remember, I'm looking for a trade signal that is supporting the daily and the 4 hour chart, mostly the daily chart, because that's the direction I want to be taking. So all this retracement, all these blue candles, their buying opportunities is very bullish, but it's going against the overall direction of the trade, which is south. The daily chart are all red candles. So here's the trade signal right there on the 1 hour chart, and this is where you would take your trade on the next candle. Wait for the two lines in MACD to cross to the downside, and there's your trade to the downside. And this one shot down quite a bit from 120. Price is at about 120.99 all the way to 109. So in a 1 hour chart, this thing shut down over 1,000 pips. Okay, obviously it was a news event because the markets would not sell off that much within one day. Okay, so let's look for, again, looking for opportunities in the direction of the daily chart. Heiken Ashi candles, 150 moving average line, and MACD. So here's another trade. Obviously the market's in a downtrend. We checked before doing our top-down analysis that Market's in a downtrend, so we're looking on the 1-hour chart for trades alerts in the direction of the daily chart. So here, 150 moving average line crossing to the downside, Heiken Ashi candles closing below, and the 2 lines of MACD crossing to the downside and crossing the 0 line. So that would be a trade you would take, and a nice move to the downside for 2 days with over 300 pips on that trade. Here we have markets in an uptrend. Now this is a counter trend trade, so I'll look at the 4-hour chart. I won't take a trade unless I have at least 2 candlestick patterns. I'm sorry, 2 time frames that are telling me the same thing. And here, the 4-hour chart, we have 2 lines of MACD cross to the upside, and we don't have price in the beginning going above the 150 moving average line, but it's obvious that we have a nice retracement going on. So I have to rely on the 1-hour and the 4-hour chart to stay in this trade. So as long as the 1-hour and 4-hour are blue, Heiken Ashi candles are the same colors, I will take the trade, and as long as MACD indicator is angled and separated going up above the 0 line on the 1-hour and 4-hour chart, then it's safe to take the trade. On a 1-hour chart, price is above the 150 moving average line, so that's a substantial retracement. Even though the higher time frames, daily and weekly, were in a downtrend, this is the market's oversold and is starting to retrace, and it continues to rally and retrace for quite some time, for over a week or so. And then what happens? The market is completely overbought, and it starts heading back down in the direction of the daily and weekly chart. And there would be a trade on the 1-hour chart. I would definitely be taking this trade. Crossover MACD, price. Let's look what's happening on the 4-hour chart. So we have a red candle on the 4-hour chart. We have price MACD crossing over on the 4-hour chart as well. So we have confluence of 2 time frames, 1-hour chart and 4-hour chart. So it doesn't matter if you take a trade against the trend as long as the 1-hour and 4-hour chart look the same. And here they did, though I wouldn't have stayed in this trade for very long because of going in the direction against the ebb and flow of the daily and weekly chart. But this trade worked out beautifully. But you may have to make sure, if you do take counter trend trades, you have to make sure you have at least a 1-hour and 4-hour chart that look the same. And here they do, and here they do. Okay. And of course here a small retracement, and then the market resumes its downtrend in the direction of the daily chart. So what's happening right now is we're looking at, let's look at the 1-hour chart. And today is the 2nd of October 2016. And the market, let's look at the 4-hour chart. Blue candles, crossover on MACD to the upside on a 4-hour chart. Let's look at the 1-hour chart, and the same thing, we have MACD crossover. The only problem is that it's turning positive, but it's also hitting a strong resistance level. So I wouldn't be comfortable taking this trade unless these candles closed above the resistance level. Then I would have the 1-hour chart, the 4-hour chart, and let me see, the daily chart is also blue. Okay, so we've got the daily chart, 4-hour chart, 1-hour chart. Heiken Ashi candles are all blue, but remember, we're in a downtrend, and this could be short-lived, but it's still valid to take the trade because we have 3 time frames that are showing us that the market's in an uptrend. The only problem, as I mentioned, it's hitting a previous resistance level. If it manages to break this 114.15 handle, then yes, then we should take this trade and continue to buy until we see a red candle on the 1-hour chart. But right now, there's a green light. The 1-hour is blue, the The 4-hour is blue, and the daily chart is blue. Let's look at the weekly chart, and it's starting to turn blue. Okay, so we may have a nice retracement, and the 2 lines of MACD across to the upside on the weekly chart as well. Okay. So this is how we trade Heiken Ashi candles using MACD, 150 moving average line, and Heiken Ashi candles. So it's just simply using top-down analysis, which is such a powerful way to trade. It's such a powerful way to analyze the markets, because essentially what you're doing is you're just making sure, looking at several time frames, that where and when to take a trade. So if you look at this chart, we're looking back from March 2016, and in hindsight, yes, it's simple. Yes, I can see on a daily chart that the market on these red candles come into play, and a continuation in a downtrend, and the 2 lines on MACD crossing to the downside. But then where do I get out of this trade? Well, it could be not that difficult. All you need to do is just recognize the overall direction on a daily and weekly chart and scroll down to a 1-hour chart so you can find an entry and also an exit. So if I highlight these Heiken Ashi, this level where market started and where the rally ended, I'll go to the 1-hour chart and see if I can find this. And very simple. All you need to do is take the trade in the direction of the daily and weekly chart. Daily and weekly chart was showing red candles, so they start showing red on the 1-hour chart as well. So take the trade, and there are several reasons why this trade would work out. You have price closing below the 150 moving average line on the 1-hour chart, which is in the direction of the daily chart. It mirrors the daily chart, and the 2 lines in MACD are crossing to the downside. So if you're not sure about if you should take a trade, it's probably because you're not looking at higher time frames and making sure that if you do take a trade, then they should be in the direction of the daily and the weekly chart. Let's look at the 4-hour chart, see if that lined up. And it did. Is it over here? There it is, right there. I can't remember which one. No, I think it's, oh, sorry about that. Every time I switch time frames, this always happens to me. Let me go back to the 1-hour chart. And just be patient with me here for a second. There it is. I found it. I just passed it up. This highlighted area representing the daily and the weekly chart in a downtrend. So we just have to wait till the 1-hour chart crosses to the downs, or rather the candles turn red. Look at the 4-hour chart, make sure it looks the same. Here it is, and then take your trade. Okay. So if you have any questions, just shoot me an email. If you haven't joined our community, just go into our website, fx-northwest.com, and sign up for trade signals. We have private coaching sessions and some other products. Have a good trading week. Thanks for watching, and